Everyone checking in on the market here. We had a gap up open with SPY breaking some weekly resistance levels, and that was due to a perfectly timed tweet by Trump. And it was intentional in my opinion, but put out just minutes before the futures market opened last night. And you have to keep in mind that's definitely something to be aware of psychologically, that right now the president wants the stock market as high as possible, and he has this news up his sleeve where he can talk about the China trade deal, and the bullish market reacts bullish to it. And so he just is kicking this can down the road, and we're not going to raise the rates in March, and we're working on a deal. And every time he puts out a tweet that it's going well, he knows exactly what he's doing. And he's also talking about bearish oil. He wants oil to go down because it's too high. I don't know if that's because he doesn't know the correlation about the market and oil. I find that hard to believe. So it's almost like he's trying to break that correlation that has been in place for so long. Who knows how in-depth his thinking goes, but it's worth keeping in mind that psychology of what's going on and that fundamental event that we keep looking towards. So what happened today at the end of the day was weakness, and we closed at the low of the day. And that's the second time that has happened on this entire bull move. It happened on the first higher low on the daily time frame, but you can see every other red day that we've had has had some lower wick, and we're almost used to the bulls just buying at the end of the day these days. And we've closed near the low of the day, but this was, again, right at the end of the day. That was that push. And look at the daily time frame, grinding this 70 RSI, not getting too extended over that level. And again, we look back to the past on the run up, and there were many times we rejected from that RSI level on the daily time frame. Looking at the hourly chart, this hourly consolidation fairly significant, but with the amount of space that we had due to the gap up open, I would expect an equilibrium where we find a higher low and then see it bounce and watch for the potential of an hourly lower high. And that's just it. The bulls gave themselves cushion. So while we closed at the low of the day, it was a green day. And like I said, we had cushion because of that gap up open. So continuing to watch the daily higher low pattern, anything above 276.35 is a daily higher low. That's going to be a very key level to watch this week. And that's also the level that marks the weekly higher low from last week. Every single candlestick is a higher low on this entire bull move. So if we break 276.35, not only do we lose the daily uptrend, but we break the pattern of every week having a higher low than the previous week. IWM, also the same thing. Close at the low of the day, gap up open, almost filled the gap. And let's see, 157.20 or 158.27. We did fill that gap today. SPY just missed filling its gap. Hourly time frame. Again, I'm looking down at this low, the last consolidation during regular trading. Let's turn off extended hours just so it's clear. That's the last hourly higher low during regular trading, and we're still holding that level. Let's see the same thing for SPY. Turning off extended hours just for a bit of clarity. And the last hourly higher low during regular trading, we're looking back down here at 278.04. QQQ, same story as everybody else. Daily higher low is 170.71 here. Hourly time frame pulling back. And during regular trading, there's actually a loss of a trend here where we did see a weak bounce attempt and a lower high was set at 174.06. And then right at the end of the day, we broke support, but it was only by a few pennies. So that's not convincing at this point. But if we lose that level tomorrow morning, then we're going to have a clear hourly trend change, whereas IWM and SPY, their positioning doesn't have that hourly trend being lost just yet. XLF, big bearish reversal candlestick on the daily after starting very strong and holding up the market the entire day. I kept seeing, I would look over at XLF and say, well, we're at the high of the day, so we know the SPY bears aren't going to get any follow through as long as that is the case. And then that obviously changed. And on the 5-minute time frame from earlier in the day, we had this equilibrium pattern setting up. Things got really tight. That was the first bear strike, and then they just kept control for the entire rest of the day. Hourly time frame, again, higher low, looking to form compared to 26.36, and we're going to watch for a equilibrium to form on this hourly time frame for the financial sector. So anticipating will likely form, and that's actually increasing bear volume as well, but looking for a higher low compared to 26.36 unless things get extreme, and then we'll see if we can bounce and set that lower high. VIX closing up at the high, so we know the daily lower high pattern has to break. I'm looking at 15.20, then looking up at 17.30. Those are the first two most important resistance levels as we try and break the daily lower high pattern. We held that low of yesterday. Actually, I take that back. We just barely broke that low of Friday, but we closed at the high of the day, and we're going to see if we can get any follow through, keeping in mind that the hourly time frame is a bit extended, little bull flag into follow through, but a bit extended, and we need we might need to consolidate and form another higher low as we see these markets bounce to form their hourly lower highs. Oil pulling back on the daily time frame, most significant red day. Again, the tweet did it. We saw it happen this morning. And that tweet came out, and look at what the price did. So he knows he can tweet and completely affect individual stocks as well as the market as a whole. And it does look like he is breaking the correlation with oil and the S&P 500. Let's see if he can do it. So for oil on the daily, we're pulling back. Support is down at 55.27, and we actually broke that level. So now let's zoom out to the weekly chart and say the weekly higher low is 51.22, and we'll see if the bulls are able to hold that little weekly support level. Otherwise, we are going to shift that momentum. Keeping in mind, we want to watch the monthly for oil as well, because we're looking for a monthly lower high. And the size of the bounce compared to the size of the dump isn't comparable, so we're very likely to form that monthly lower high, and losing the weekly uptrend is our indication that the monthly lower high has formed. Natural gas got the bull break today. Congrats to the bulls. Again, I've dictated, or I should say I've laid out that I'm not going to be playing this bull break because it's too extended for me. The hourly RSI is up above 70, and the 4-hour RSI is up above 70, and the highest it's been in a long time. Doesn't mean we can't run. It's just enough to make me not comfortable on that trade entry. So I'm going to sit back and see if we consolidate and I get an entry that I like. And it all depends on risk to reward. If we pull back near a clear support level, I might play off of it. But if we're floating up here on the hourly time frame, and if I'm going to trade UGAS, just looking at the UGAS hourly chart, if I were trying to make a bull entry up here, the last support is down at 32.73, and that is 5-6% from where we currently stand, which is way too much risk for my trading styles. So perhaps an hourly higher low. Again, if the support level is close by to where I'm looking to make an entry and I like the risk to reward setup, I might trade it. But looking at the daily time frame, actually let's look at the weekly chart. If we do get a bit more follow through, we are going to be looking for this weekly chart to make a decent move. And I've still got UGAS up. Want to look at the no time decay version. It is still a potential weekly bear flag, so the bulls have to see that follow through to have any kind of confidence. And I'd say if we get over $3, that will start to negate this potential weekly bear flag at this point. So we'll continue to watch that natural gas move, watching the 4-hour uptrend at this point, very clear. As long as the bulls hold that, they do have a lot of strength. And we'll check back in tomorrow. Have a good rest of your night.